Okay, let's unpack this. You want to be well-informed quickly, but really well-informed. And while something like a corporate 10K filing might seem like a daunting stack of paper, or let's be honest, a massive PDF, it is actually a treasure trove of information just waiting to be excavated.
Exactly. And that's our mission today. We're diving deep into the Home Depot's latest 10K filing, specifically for the fiscal year that ended on February 2, 2025. Our goal is to pull out the most important nuggets of knowledge, maybe some surprising facts, and give you a shortcut to truly understanding this retail giant's business, its strategies, and, well, its financial health.
So let's start with the familiar image. A Home Depot store, you walk in, you see the orange apron, the endless aisles. But after going through this 10K, what's something about its sheer scale or complexity that maybe jumps out? Something most people might miss.
Well, what's really fascinating, I think, is how the 10K just hammers home that Home Depot isn't just a big retailer. It is the world's largest home improvement retailer based on net sales for fiscal 2024. Full stop. And when you think about that footprint, we're talking 2,347 stores spread across the U.S., Canada, and Mexico as of the end of fiscal 2024. That breaks down to over 2,000 in the U.S. alone. 2,025, actually.
Wow, nearly 2,350 stores. Averaging, what was it, around 104,000 square feet inside, plus another 24,000 square feet for the garden areas. Just picturing trying to find that one specific widget in 104,000 square feet really makes you appreciate the logistics they've mastered. But it's not just the physical stores, right?
Yeah. Oh, far from it. Beyond those huge retail locations, the 10K talks about this sprawling network, over 500 distribution and fulfillment centers, plus their e-commerce websites in the U.S., Canada, and Mexico. Very robust. And the sheer breadth of products, I mean, it goes way beyond just lumber and paint. You've got building materials, lawn and garden, decor, and even specialized stuff like maintenance, repair, and operations MRO products for facilities. Plus, they're huge in services. Home improvement installation, tool and equipment rental. It's a whole ecosystem.
So they're clearly selling a lot of things to a lot of different people. But who exactly are these customers? Why does the 10K spend so much time defining them?
Right. And this is where you really see their customer strategies starting to show up. The 10K outlines two main groups. Consumers, that includes the do-it-yourself or DIY folks, and also the do-it-for-me, DIFM customers, the ones you hire out. But the real emphasis, you can feel it reading through, is on their professional customers or pros. And this isn't just a general term. The filing gives this really granular breakdown. We're talking professional renovators, remodelers, general contractors, small to medium home builders, maintenance pros, handymen, property managers, building service contractors, and all the specialty tradespeople, electricians, landscapers, plumbers, painters, pool contractors, roofers, you name it. This level of detail, especially for pros, it really signals Home Depot's focus. It's a higher value customer, maybe more predictable.
And arguably less sensitive to things like interest rate hikes, maybe, which feels like a big strategic shift.
Exactly. That seems to be the bet.
Okay, so this pro market is clearly a major focus. The 10K makes it obvious they're placing a huge strategic bet here for future growth. Now, do the 10K also talk about the risks of putting so many eggs in that basket? Yeah. Especially with such a massive acquisition.
That's a really good point, and it ties directly into their biggest move in fiscal 2024, which was, of course, the acquisition of SRS Distribution, Inc. And this wasn't some small bolt-on acquisition. SRS is described as a leading residential specialty trade distribution company, focused on roofing, building products, landscape, pool supplies. SRS itself is huge, over 780 branch locations across the U.S., each with its own distribution setup, delivery gear, inventory, the works.
And the strategic thinking behind it, as laid out in the 10K, seems pretty clear, doesn't it?
Yeah.
It's all about accelerating growth with those pro customers, establishing Home Depot as a top-tier specialty trade distributor across different areas, and complementing what they already do to better serve those complex project needs for renovators and remodelers. And the price tag was significant.
Very significant. A cash purchase consideration totaling $17.7 billion. Wow.
Yeah. And this huge acquisition, it fits right into their stated capital allocation strategy. In fiscal 2024, they invested $3.5 billion in capital expenditures just to support the business and their goals. Their priority list is clear. Invest in the business first, then pay dividends, and then return any excess cash to shareholders via share buybacks. And it's really telling that they actually paused those share repurchases back in March 2024, specifically because they were anticipating the SRS deal. Shows how committed they were. And beyond SRS, they're pouring money into other pro initiatives too, like a customized online experience, a dedicated sales force, more pro-focused brands and products, that big delivery network, their Pro Extra loyalty program, better credit options like the Pro House account. It's a whole package. Okay, so they have the strategy, the big acquisition. How do they actually execute all this? Especially with, the complexity of modern retail and the specific demands of this high-value pro customer. The 10K talks a lot about creating a frictionless, interconnected shopping experience, and it boasts about aiming for the fastest, most efficient, and most reliable delivery capabilities in home improvement. How do they pull that off?
Well, it's pretty impressive when you dig into the details. They're constantly enhancing their websites, their mobile apps, trying to make it seamless whether you're in a store, a branch, online, on the job site, or even in your home. Their supply chain focus is laser sharp. Product availability, speed, reliability of delivery, all while keeping costs in check. And this involves a whole mix of fulfillment options. You've got same-day or next-day delivery from stores and fulfillment centers, omnichannel centers for direct-to-customer shipping, market delivery operations for that final mile, especially for big stuff like appliances. They've even opened more of those flatbed distribution centers just for large items like lumber.
And the physical stores themselves are still critical hubs in this network, aren't they? Acting as places for pickup, returns, even fulfilling deliveries. The 10K actually details 4 key interconnected programs. Let's see if I remember. Bosch SS, buy online, ship to store. BOSS, buy online, pick up in store. BOA DFS, buy online, deliver from store. And BORS, buy online, return in store. Essentially, like every possible combination to get or return your stuff easily.
Exactly. And the stat they give is pretty telling. For fiscal 2024, about 50% of their U.S. online orders were actually fulfilled through a store. And now, with SRS in the mix, those branch locations can do direct deliveries to job sites. That's huge for pros.
But how do they manage all that complexity? The systems behind it must be incredible.
Oh, absolutely. That's where their internal systems are crucial. Home Depot relies, extensively on IT systems and personnel for pretty much everything. Sales, customer data, supplier data, forecasting demand, inventory, supply chain management, payments, order fulfillment. It's all tech-driven. And they take cybersecurity very seriously. They mention using the NIST cybersecurity framework, adhering to payment card industry standards. It's baked into their enterprise risk management. They even have an incident response team, do annual tabletop exercises. And importantly, they state they haven't had any material cybersecurity incidents in the past fiscal year. That's significant.
Say, who oversees all this?
It goes right up to the top. Cybersecurity is overseen at the board level by the audit committee. They get quarterly reports from the CIO, the CISO, even presentations from outside experts. It's clearly a high priority.
Okay, now for the bottom line. The financials. What do the latest numbers from the 10K tell us about how Home Depot's actually performing? And how did that extra week in fiscal 2024 affect things?
Right, let's pull back the curtain on those numbers. So fiscal 2024 had 53 weeks versus 52 in 2023. That extra week, it added about $2.5 billion in net sales and boosted diluted earnings per share by around 30 cents. So when you see that net sales for fiscal 2024 increased by $6.8 billion or 4.5%, hitting $159.5 billion, you have to remember, and this is crucial, that a huge chunk of that increase, almost all of it really, came from the SRS acquisition that contributed $6.4 billion in that extra 53rd week.
Okay, so the underlying sort of organic growth might be telling you a different story.
Exactly, which is why you have to look deeper at comparable sales.
And what did those comparable sales figures show?
Well, despite the overall sales growth number looking good, total comparable sales actually decreased 1.8% in fiscal 2024. And that breaks down into a 1.0% decrease in comparable customer transactions and a 0.9% decrease in the average ticket size. The 10K points fingers directly at, quote, heightened macroeconomic uncertainties and other macroeconomic factors, including the persisting high interest rate environment pressuring home improvement demand. So yeah, this is a key takeaway. Even a giant like Home Depot isn't immune to the broader economy.
Interesting. But their gross profit margin held steady, 33.4% for both years.
It did, yeah. They mentioned lower transportation costs and less shrink, that's inventory loss or theft, in their main segment, helping that. Though that was partly offset by bringing SRS into the consolidated results, which likely has a different margin profile. Online sales kept growing, though, representing 15.1% of net sales and up 6.6% year over year. But their return on invested capital, the ROIC, did take a noticeable hit.
Right, down from 36.7% in fiscal 2023 to 31.3% in fiscal 2024. Why was that?
Primarily driven by financing that SRS acquisition, taking on more long-term debt and having higher average equity because of it. But Looking at their cash flow, they're still generating a ton of cash. $19.8 billion from operations in fiscal 2024. And like we said, they used commercial paper, issued $10 billion in long-term debt, plus cash on hand to fund SRS. And they're still committed to shareholder returns. Paid out $8.9 billion in cash dividends in fiscal 2024, and just announced another dividend increase in February 2025, up 2.2% to $2.30 per share quarterly. They also did manage about $649 million in share repurchases before hitting pause for the SRS deal.
Okay, so even for a company this big and successful, there are always risks. Now, you might think the risk factor section is just in a legal boilerplate, but reading through it in the 10K actually gives you a really clear picture of what keeps Home Depot's leadership up at night. What are some of the big challenges they highlight, and how do they talk about managing internal integrity?
Yeah, this section is super insightful. It's where the 10K really shows its value in terms of transparency and self-assessment. For Home Depot, a huge one is just intense competition. It's coming from everywhere, other big boxes, online players, specialty retailers, multi-channel. It's constantly evolving. Another key strategic risk they flag is failing to keep up with customer needs and expectations. That includes everything from changing demographics and preferences to data privacy rules, even things like AI and sustainability expectations, and just successfully executing that interconnected retail strategy we talked about that requires constant investment and smooth integration of new tech, which is always a challenge.
Right, and managing all those supplier relationships, especially for the unique products that set them apart. That's a risk, too. Plus, just the inherent risks that come with big deals like mergers and acquisitions, especially integrating a company the size of SRS. Then there are the operational risks, like attracting and keeping good employees. That's huge, especially in a tight labor market with wage pressures. And it was interesting, they noted some SRS associates are unionized, and they acknowledge wider union organizing efforts. I mean, just thinking about managing that many people globally, it's a massive task.
Absolutely. And another major operational worry is supply chain disruption. Could be anything: natural disasters, cyber incidents, trade disputes, tariffs, labor shortages, geopolitical issues, lots of potential pitfalls. They also specifically call out challenges in maintaining a safe and secure environment, including dealing with heightened shrink, that inventory loss, particularly from what they call organized retail crime. You hear a lot about that these days. And of course, the constant vulnerability of their IT systems, cyber attacks, data breaches, even insider threats. It's a massive ongoing concern for any company so reliant on digital operations.
And beyond those kinds of risks, there's the whole legal and regulatory minefield they have to navigate. The 10K mentions routine legal proceedings as nothing major expected, but it does give specific examples like that consent decree with the DOJ and EPA from 2021 about lead-safe practices in their installation business. And they're still talking about penalties for violations by third-party installers there, plus that $1.6 million penalty in Washington state over selling a prohibited refrigerant. Seems like they're constantly juggling compliance issues.
It really is a complex environment. And this section also gives us a fascinating peek into their internal controls, specifically through excerpts from their insider trading policy. And this isn't just fluff, it shows a really rigorous approach. It covers everyone: directors, employees, contractors, bans trading on material non-public info, obviously, but also specifically prohibits short sales by certain execs and directors, sets strict trading windows, usually only right after earnings releases, requires pre-clearance for trades for top people, even prohibits using Home Depot stock as collateral for loans or in margin accounts for directors and key officers. They even restrict participation in expert networks trying to get inside info. It's quite comprehensive, really shows a commitment to ethical conduct and investor trust.
Wow. What a fascinating deep dive into Home Depot's 10K. It really underscores how much you can learn about a company's strategy, its financial health, the challenges it faces, way beyond what you just get from headlines. It takes this document that seems, frankly, pretty dry and turns it into this incredible insight into a retail giant, gives you that shortcut to really being well informed.
Absolutely. And maybe something for you to think about. Considering Home Depot's huge investments in the pro market, the SRS deal especially, and all these efforts to create this interconnected experience, what long-term societal or economic shifts might they be anticipating, or maybe even helping to drive through these strategies? And what unexpected challenges or maybe opportunities might pop up from this transformation in the next few years? Something to ponder.